Well, the days of record low mortgage rates may be gone. BMO, Bank of Montreal, stunned the market when it dropped its borrowing rate to just 2.99% last month. The Royal Bank and the TD followed suit, trying to stay competitive in a suffering mortgage market. But the change now comes as a new survey suggests Canadians are not confident about the economy. CTV's Louise Hartland has the story.
I was shocked, ecstatic, and felt very fortunate and lucky to have signed on the dotted line yesterday.
CTV News editor Vin Nguyen squeaked in just under the line, buying his first home at a mortgage rate of just 2.99%.
Yeah, the rate actually helped me decide that I should kind of go faster on this and look a little bit harder.
We had a tremendous response to that rate. Certainly our volumes picked up twofold for it.
Mortgage broker Jesse Fibiger says while the low rate was attractive, the BMO no-frills mortgage wasn't for everyone.
For the slight discount you get in rate, you take on these stipulations that could cost you a lot more in the long run.
RBC and TD followed the trend, also offering a mortgage at just 2.99% with traditional terms. But they too pulled the offer after a shift in the bond market.
Interest rates change, and people need to be very aware that interest rates will change, and they need to plan accordingly.
Now rates at the major banks are sitting at just over 3%.
It's not like rates are so much higher than that 2.99. For a slightly higher rate, you can have all the flexibility that will end up saving you more money in the long term.
A $300,000 mortgage over a 30-year term would have cost you just over $1,260 a month at 2.99%. That same mortgage at 3.29% will now cost you just over $1,308. But even a difference of fewer than $50 a month can be too much for some. The Royal Bank of Canada says Canadians are working hard to manage their debt, but they could be in trouble down the road.
Enough people anyway are not setting aside money for a rainy day, a contingency fund, and really should be doing that, and any good financial planner would advise them to do that.
A survey found personal debt, which does not include mortgages, is down this year, and British Columbians are slightly ahead of the national average. And as always, with low mortgage rates, brokers warn clients not to bite off more than they can chew. Do your homework to figure out how much you can afford if and when the rates go back up. Louise Hartland, CTV News, Victoria.